To be here today. And I appreciate each and every one of you taking the time to allow us to be able to share the Trusted Smart Chain vision with you. Today is really about perspective. It's about where cryptocurrency started and why, how it's evolved, and where it's actually heading as it becomes more integrated now into the systems that each and every one of us recognize that we understand. And one of the reasons that this is a good conversation to be having right now is because we've seen some very real, very public progress, especially over the last year. Under the new current administration, a few things have shifted that have changed the trajectory of the blockchain cryptocurrency space. For example, Bitcoin spot ETFs went from that's never going to happen to officially being approved, which unlocked institutional access to a at a scale that crypto really has never seen before. Executive orders were recently signed that now give banks the ability to be custodians over your cryptocurrency and even sell you cryptocurrency, which is interesting because only 3 years ago, the same banks were telling you that crypto was a decentralized Ponzi scheme. So they have, taken the position of if you can't beat them, you might as well join them. BlackRock, Fidelity, JP Morgan, and other legacy giants have already built products, filed paperwork and patents, and deployed a tremendous amount of capital in this direction. And of course, the tokenization of real world assets has now moved from theory to execution. And as Dean said, it's become one of the biggest conversations in the world of banking and finance. And perhaps the most important is government and regulators have shifted their tone, moving away from this hostility towards digital assets, and now they're adopting. They're getting behind, and they're committed to making the United States the crypto capital of the world. In essence, cryptocurrency has stopped being treated like this experiment, and it's now being positioned as financial infrastructure. And if you look at these weren't just fringe moments. These were signals. These were signals that this technology wasn't going away, and that it is not just starting to. It's already being taken more seriously. Now, I want to give you a little context on why I'm involved in this space at all. I first heard about Bitcoin back in 2010, 2011. A very good friend of mine approached me and invited me to invest in Bitcoin. And I asked him to explain what it was. I asked if it was gold or a silver coin, and he says it's digital. And I said, digital, okay. Where do I buy it? And he says, well, you got to buy it. You got to find somebody that's willing to sell it to you. And I said, okay. Once I buy it, what can I do with it? He says, oh, well, you can't do anything with it. And I thought, okay. So I can't really do anything with it. There's no case use. And I said, well, what if I want to liquidate it and I want to get my money back? And he says, oh, well, you got to find somebody that's willing to buy it from you. And I thought about that and I said, okay, so you want me to buy this coin that I can't hold. I got to go find somebody that's willing to sell me these coins. I can't do anything with them. And it sounds like I got to go to a dark alley deal somewhere to sell it before I can get my money back. And I told him, I said, listen, I think that you're getting scammed. I think that this is a bad idea. And I chose not to get involved. He went ahead and invested, and he kept investing over the course of the next 4 years. His Bitcoin portfolio in 2020 was worth over $50 million, and that was long before Bitcoin hit the levels that it has achieved over the course of the last couple of years. So I always felt like I missed the boat on that one. I believe that the height of all stupidity is forming an opinion without knowing all the facts, and that's exactly what I did. So when he came back to me in 2016, he said, look, there's another project launching called Ethereum. And he introduced the concept of mining or supporting the infrastructure and earning daily digital rewards. And I, to be completely honest, didn't understand it at the time. When I hear the term mining, I had a totally different concept of mining in my mind. My grandfather was a coal miner. So when I hear mining, I think of something entirely different. But I decided to write a check and I got involved. And I'll tell you that era, that period of time was crazy. It was the wild, wild west of crypto. It was the pinnacle of all hype. Thousands of projects were launching. Everybody wanted to launch their own currency. There was tons of hype and there was very little substance. And being in it during that time and over the next few years forced me to get better at asking one question. What actually has a real use case? Over time, it became clear that the projects that lasted, they weren't the loudest ones. They were the ones that were building the infrastructure. And around 2021, I was introduced to this idea of tokenizing real world assets. And to me, that felt like cryptocurrency growing up. We were moving from hype and speculation to a place of tangibility and substance. It was really the first time the technology was now being connected to tangible economic activity. I got involved in a project that was tokenizing commodities, things like oil, natural gas, and gold. And I started off as a node operator. I've always believed that operating nodes is a more sophisticated way to be involved in cryptocurrency, and I'll talk about some of those reasons today. And then eventually, I stepped up and I was brought on to help consult for this particular business, and my role was to help them with their marketing and their expansion and develop their organization. And so we grew that into about 60 different countries around the world, and they became one of the more prominent pioneers in this space. About that same time, some of you might remember that the FTX exchange went under and a guy by the name of Sam Friedman went to jail. And when that happened, the government took a very aggressive position against cryptocurrency. First of all, the banks didn't love money moving out of the traditional systems. The government was trying to figure out how to regulate something that was moving faster than their policy. Everybody was calling for regulation, everybody was calling for clarity, and what we ended up with was enforcement. So lawsuits started flying across the industry. We saw Binance get sued. We saw Coinbase get sued. Of course, you probably have all read about XRP being sued and hundreds of other companies as well. The claim was pretty much that Bitcoin was not a security, but everything else was considered a security. Therefore, they now had to go register with the Security Exchange Commission. The problem was is that they didn't provide a pathway forward for crypto companies to be able to do that. And if they tried, they were actually rejected if the word crypto was on their application. So essentially, overnight, what the US government did is they pushed the entire cryptocurrency industry into a gray area. The analogy that I would give you is it was a lot like driving on the Autobahn. There's no speed limit, and yet you could get pulled over for speeding whenever they wanted to pull you over. And that's essentially what was happening. Fortunately, the company I was involved with got caught up in that wave, and so did I personally. As ambassadors, as affiliates, we were actually lumped into a civil lawsuit where they went after the owners of that particular company. And we had a decision to make. We could either work towards settling with the SEC and paying a large fine for selling an unregistered security without a securities license, or we could fight the claims against us and go challenge their position on what was and what wasn't a security. Well, neither one of those pathways were very attractive at the time, but I'm a big believer that if you're passionate about something and you believe in something, you have to be willing to stand up and fight for it. And so we actually chose to fight the SEC, and this was a pretty big deal. It was a David versus Goliath case. It was very public. It was on the front page of everything from Yahoo Finance to Bloomberg and everything in between. Elon Musk was tweeting about it. Mark Cuban was tweeting about it because they had had their run-ins with the SEC and their abuse of power. And so we went through a pretty big fight, and it wasn't easy. Assets were frozen. False narratives were shaped in the media intentionally by the SEC. The process dragged on, but in the end, we actually won our case. And a federal judge not only threw the case out, but the SEC was sanctioned and fined millions of dollars because of their deliberate misrepresentation of the case. Eventually, the attorneys that brought the case forward were actually permanently retired from the SEC, and the Salt Lake City office that brought it was the regional office that brought the case forward against us and 19 named defendants. They actually had to close the office down. And I can tell you that that experience changed the way that we look at this industry. It was a big deal. The entire crypto industry was looking at this case and watching to see, because they knew that it would set case precedent moving forward for some of these other lawsuits and some of these other cases. Eventually, what happened was Gary Gensler ended up getting grilled on Capitol Hill. He was the head of the SEC because of his gross misuse of power. And eventually, Gary Gensler ended up stepping down. We had a new administration come in. We had a new head of the SEC that took over. Paul Atkins stepped in, and eventually they made the declaration that the war against cryptocurrency is over, that they were inviting those that have been persecuted and prosecuted back to the drawing board. The innovation that had been pushed outside of the United States during that period of time, they were bringing it back. And they made it very clear that they were going to work towards that clarity and that framework that had been lacking. And over the course of the last year, it's been remarkable to watch the progress that's taken place in this industry. Cryptocurrency was in the headlines no less than 20,000 times in 2025. We've watched everything from these ETFs be integrated to executive orders being signed, major banks and institutions that are getting behind cryptocurrency. And now tokenization has become the biggest conversation in this space today. During that period of time, and I believe that sometimes you go through these challenges in life to push you down a different path to exactly where you're supposed to be. Sometimes you find your calling going through those challenges. And one thing was very clear, and that was there wasn't an issue with the technology. The issue was the lack of structure, the lack of clarity, and the lack of framework from the government side. And so my partners, we collectively came together and we asked a question. What if we built this the right way from the very beginning? What if compliance and infrastructure weren't just some afterthought, but they were the actual foundation? And that question led to Trusted Smart Chain, which is a layer one blockchain that is built specifically around asset tokenization and long-term infrastructure. And that's what today is all about. It's not about going and buying some coin one time and hoping that you got it lucky or bought it at the right time and it's going to go up. It's about being a part of the infrastructure. It's about being a part of where the technology and the entire industry of cryptocurrency is going. So we're going to talk about why all that matters and how infrastructure and what we have built is making this all possible. So with that, I'm going to go ahead and pull up my slides. We'll jump in here. I do have a little video I want to play here in just a moment that really sets the stage for tokenization. But before we do that, I want to start with a disclaimer. I am a co-founder of a company called ProsperLink. It's an LLC. My partners, I have two other partners, Matt and Billy, Matt Nicosia and Billy Beach, and we came together and we actually we are the co-founders of Trusted Smart Chain. Now, Trusted Smart Chain operates as a DAO. It's a decentralized autonomous organization. So what does that mean? It is a legal entity recognized by the government and it is not owned by anyone. We don't own it. We support it as node operators just like everybody else supports it. But in the end, it's actually governed by a legal charter. And that charter can be read at thenovadao.com. So what I'm going to talk about today is for education and information purposes only. And I say that because I'm not a financial advisor. I'm going to share some of my opinions and things that I've done and things that I believe over the course of 10 years of being in this industry. We're going to be talking about what's called trust nodes today. And nodes are classified as software licenses, not investments. We don't offer an ROI. We don't offer guarantees of income or profits or financial returns of any kind. At the end of the day, we guarantee one thing, and that is that if you are supporting the Trusted Smart Chain blockchain, if your node remains active for your support and participation, you will receive a daily distribution of the blockchain's native token, which is the Trusted Smart Chain token, every single day for the next 120 years. Now, what happens to that token as far as value? We can't guarantee that it's going to go up. We can't guarantee that it's going to go down. No different than if you went and bought a Bitcoin miner and you activated it today, you could connect to the Bitcoin network and you could start earning Bitcoin for your support. There's nobody at Bitcoin that's guaranteeing you an ROI. There's nobody at Bitcoin that's going to guarantee you that it's going to go up. Now, you can study it. You can look at the tokenomics. You can look at the history. You can look at the supply. You can look at the demand, and you can make a well-informed decision on what you think Bitcoin is going to do. But it is not classified as an investment. It is classified as software. So with that, let's go ahead and jump right in. We built Trusted Smart Chain to bridge a gap. We wanted to bridge the gap between these high valued assets that were wanting to raise capital. They were wanting to utilize tokenization and blockchain. There needed to be a regulatory and compliant pathway forward for them that provided accountability to the real world asset and investor protection on the other side. Now, when we talk about blockchain, first of all, I want to make sure I'm going to use some references today. If you're newer to crypto, I want to make sure that you understand some of the terminology. So first of all, you have exchanges. That's where people go to buy and sell cryptocurrency. And then, of course, you have crypto. Bitcoin was the first cryptocurrency that was introduced in 2009. And what makes all cryptocurrency possible is blockchain. Blockchain is the infrastructure. What we have built is a layer one blockchain. So how does a blockchain work? Let's say that Dean wanted to send me a transaction. He would open up his digital wallet. He would decide which cryptocurrency he's going to send, the amount. He would then get my digital wallet address. He would complete that transaction. A block would now be created that represents the details of the transaction. From there, that block is now broadcasted to all of the nodes in the network. And those nodes work simultaneously to validate that transaction. Once it's validated, the block is now added to the blockchain and the money gets sent from point A to point B. A couple of key points here that I want to touch on. Number one, if you look at number 4, there's a question mark in the middle. In a centralized system, that would be the banks. The banks are in full control. In a decentralized system, there is no central entity. It is fully decentralized. Every single node operator is independent, yet collectively, synergistically, they work together to validate transactions and secure the network. Number 2 is the nodes play an integral role in the process of money being sent. Without nodes, blockchain doesn't exist. Without blockchain, cryptocurrency doesn't exist. The idea of decentralization is all about by the people, for the people. Now, let's talk a little bit about tokenization of real world assets here. I want to play just a quick video for you, 90-second video that will summarize what is happening in the world of tokenization. You're going to hear from some of the biggest and most influential people in the world of banking right now talking about tokenization in the course of just the last 60 to 90 days. That's there we go.
The world is turning value into code. Tokenization is the next evolution of ownership. Programmable, auditable, and instantly transferable.
If you think about what tokenization is, it's essentially upgrading the ledger where capital markets run to a better ledger technology that is public, that is distributed, cryptographically secured, which will improve how people transact with securities.
The future is about assets, not just crypto tokens, but everything we value. On-chain.
I would say the biggest question from central banks is, well, what is the role of tokenization and digitization? It will be changing the technology around the plumbing of finance.
Institutions are building the rails, from stocks to real estate, from bonds to private markets. Tokenization liberates assets.
Tokenization, we see that as an evolution of the financial securities market. With tokenization, you will certainly be able to reach out to a bigger range of investors. You will get access to finance to many more people.
This isn't a side trend. It's a market structure upgrade. Settlement speed, global access, and fractional participation.
Tokenization is a freight train. It can't be stopped.
It's a very efficient technology. We think it's going to open up a lot of new investment opportunities.
I agree that tokenization is probably an accelerator of the diversification of the monetary system and diversification of currencies.
The future of digital assets isn't coming. It's being built. Right here, right now.
All right, if you'd like to see that full video, we'll drop a link in the chat so that you can watch the full video. That's a recap of our event that we recently just held in Puerto Rico. But I think that it does a really good job of setting the stage for the conversation today of tokenizing real world assets. Now, let's talk a little bit about what type of assets that we're seeing tokenized today. We're seeing everything from luxury hotels, even artwork, existing businesses, commercial property. Perhaps in the future, you might see a sports team be tokenized. Imagine, I think Green Bay set the stage. The Green Bay Packers set the stage for what a team that was owned by its members, if you will, its fans. Well, imagine in the future where these teams tokenize and you have digital tokens that give you ownership in the team itself. Existing businesses, commercial property, residential property, real estate, REITs, commodities, oil and gas companies. All across the board, we're seeing all kinds of different companies that are now tokenizing. To give you some perspective on the growth. To give you some perspective on the growth, in 2021, we saw approximately $2.6 billion in assets that were tokenized. This last year, we saw about $500 billion in assets tokenized. And by the year 2030, it's projected that we'll see conservatively $16 trillion in assets that are tokenized. To give you some perspective, that's the entire U.S. national debt is 40 trillion. So we're talking about 40% of the entire U.S. national debt from the standpoint of tokenizing assets over the course of the next 4 years. The reason that we have to ask the question that we have to ask ourselves is why? Why are we seeing this transition over to blockchain when it comes to these companies wanting to raise capital? The simple answer is it's faster, it's cheaper, it's more efficient, it's less risky, and it's more cost effective for a business, a company to be able to raise capital utilizing blockchain than some of the alternatives. They could go to private equity. Private equity typically wants you to give up control, which nobody wants to give up. They could go to the capital markets. They could take their company public. The problem is the cost of capital today to go public is about $5 million on average. There's only about 40,000 companies on the stock market. 300 million companies exist, which means that 99% of the companies out there don't have access to the system. And let's say that you do make it to the stock market. Congratulations, because your stock goes from $1 to 80 cents the moment that you ring that bell, largely because of manipulation. You have major banks and institutions, BlackRock and Hindenburg, that have all of these different resources that legally allow them to be able to manipulate the stocks in their favor. So if you're a small cap company that's wanting to go raise capital, that's a very risky proposition. On the other hand, you can utilize blockchain. It's about 1/20th of the cost. Because blockchain is fully transparent, they're not exposed to those same traditional risks that they would be in the capital markets. So for those reasons, we're now seeing this massive paradigm shift in the world of banking as more and more companies are looking to utilize tokenization to be able to raise capital. Now, of course, there are challenges in this industry. The challenges stem from a lack of regulation and a lack of clarity and a lack of framework. Now, it is coming. We've seen some good strides this year. We saw the Genius Act that was passed in June of this last year, which was aimed at stable coins. Right now, they're focusing on the Clarity Act. They've been meeting about this crypto bill that hopefully will be coming here soon that will provide even more clarity and more framework. But if you think about it, if you wanted to take a company public, there's investor protection. There's accountability. There's a checklist that every single company has to follow that includes an audit, a proper registration, approval, proper reporting. In the world of crypto, none of that exists. And as a result of that, it's left room for a lot of bad actors. And so what we have done is we have developed a universally accepted framework for tokenization. What we're doing is we're providing a pathway forward for these businesses to tokenize these real world assets in a secure, and here's the key word, regulated and trusted environment. Number one, we're only focusing on real existing businesses with cash flowing assets. We're not interested in speculative or unproven projects. Now, how do we do this? We actually have built a layer one blockchain where the regulation and compliance is actually built into the launchpad and the actual software itself. So what does that mean? It means that every single real world asset that comes onto the trusted smart chain must register as an investment and meet SEC regulations. They have to register as a security and be approved. What does that do? It instantly requires them to go get an audit up front, annual audits thereafter. They have to ensure that all of their assets are properly valued, tracked, and secure. And it leads to trust, transparent reporting on asset value, ownership, transaction history. See, it's not enough today to say that I'm launching a token that's backed by gold or oil or real estate or billions of dollars in businesses. The terms backed by get overused in this industry, and they're used very strategically from a marketing standpoint. Here's the problem. The problem is that unless that real world asset is willing to go through a regulatory and compliant process that A, starts with an audit that establishes that the asset even exists and establishes true value, and then B, binds that physical asset through a smart contract to the actual shares, aka tokens that are being sold in the open market. If they're unwilling to go through that process, then all you have is clever marketing that's designed to get your dollars. Now, people ask me all the time, how are you different than some of the other blockchains that are out there? There are other blockchains, Ethereum, Solana, Binance. We're not the first to tokenize real world assets. It's obviously been around since 2021. And so what is our unique and meaningful purpose in the marketplace? I'm going to play a little 70-second video for you. We were sitting outside of Washington, D.C., right outside the White House here. We had just been recognized for Blockchain of the Year for the impact that we had in 2025 by the IMA. In attendance, we had all kinds of congressmen and senators and the Speaker of the House. And I filmed this video because I wanted to illustrate what really separates us from our competitors in the marketplace.
People often ask me, how is Trusted Smart Chain different than any other blockchain that's out there? I was recently having a conversation with ChatGPT, and I asked the question, how many blockchains are out there today? And it said over 1,000. And I said, okay, how many are true layer one blockchains? We're not talking about, an extension of Litecoin or some type of a white labeled blockchain. And it came back and said 130. And then I asked, well, out of those 130, how many are fully operable? That means that their node network is active, their validators are online, they have the ability to be able to host a smart contract. And it said 30. And I thought, man, we are one of 30 layer one blockchains, which is pretty exciting. Then I asked the question, how many of those focus exclusively on real world assets? And it said 10. And then I asked the most important question. How many of those blockchains require every real world asset to file a registration A, register as an investment with the Security Exchange Commission, have independent audits up front, and annually thereafter? And it said 1, Trusted Smart Chain. You want to know how we're different? We're raising the bar in this industry.
What you have to understand is the blockchains that were built before us, they were built for a different era. They were built for the speculative era. If you think about it, none of these blockchains have regulation or compliance in mind. They were open source code. Anybody could go throw a coin together, and a lot of people did, and they could go host it on any number of these blockchains. As the industry moves away from hype, as it moves away from these speculative coins that have no intrinsic value, regulation and compliance is at the forefront of the conversation, especially as we turn the page towards tokenization of real world assets. And what Trusted Smart Chain is doing is we are leading the way. To our knowledge, we are the first layer one blockchain in the entire world that has built regulation and compliance into the actual infrastructure of our blockchain. Now, to be clear, this is not an idea. This is not a capital raise. We're not looking to raise capital. Our blockchain is fully functional. We already built it. We self-funded it. It launched. We have 38,000 active nodes that are currently supporting our network all over the world. We have transactions that are happening on our blockchain every single day. We currently have right now 12 independent real world assets that are in the process of onboarding onto the smart chain. We have another 30 to 40 that are in the early stages of coming on board in discussions and structuring as we speak. Our goal is to bring on no less than 100 real world assets within the next 3 years. We believe internally that we can accomplish, we could bring on anywhere from 2,000 to 3,000 real world assets over the course of the next 3 to 4 years. So our conservative goal is 100 real world assets. The average value, what we're looking for, is approximately 50 million. Companies that are already existing with assets, they're cash flowing, they're looking to raise capital. We've also built one of the most esteemed blockchain communities in the world. If you've ever been involved with crypto, you know there is no customer support. If you own XRP or Bitcoin or Ethereum or any of these other projects and you have a question, there's nobody to call. There isn't a support line. And we realize that there's a huge demographic of people that are coming into cryptocurrency today. It might surprise you that 28% of the US population now owns cryptocurrency. So there's a huge demographic of people that are coming in that A, don't want to go gamble with meme coins, and B, there is a learning curve. There is absolutely, the school of hard knocks is real in this space, and it can be very expensive. So we created a community that gives our node operators access to tremendous education, both through social communities, Zooms that are happening on a weekly basis, 5 different Zooms happening on a weekly basis, and events that are happening all around the world. We've held 9 events last year. We've already held 2 events this year as well. And what it does is it gives them access to education that will help them to develop their confidence and their competence in this space so that they can capitalize on this next era, if you will, this new world economy that we are living in. We had the genesis of our blockchain in March of last year, so we're coming up on our 1-year anniversary. We've minted approximately 2.3 million tokens so far. We have a market cap of somewhere in the neighborhood of about $75 to $80 million right now. Our token is trading live in the open market. It's trading on T7X.io, which is a licensed digital trading platform and exchange. They have a license with the Security Exchange Commission and money transmitter licenses. We're just listed on CoinMarketCap a couple of days ago. We're waiting for information to be aggregated in. We kicked off a belief building initiative very early on. The idea was to operate in a complete place of transparency. A lot of these projects, I mean, if you think about it, it started with Bitcoin. They operate in obscurity. Nobody really knows who Satoshi Nakamoto is. It could be a person, it could be an entity, it could be a government. There's theories it's Elon Musk, and there's all these crazy theories that are out there. And that kicked off an entire trend, but that trend unfortunately led to a lot of fraud because nobody could be held accountable. While I understand and respect decentralization, we have taken a different approach. Our founders are out front. Our development team is out front. Our node operators have continual access to our node operators and to the team. We do that through events. We do that through Zooms. And even our real world assets that are coming onto the platform, when they go file, you can go look up their Edgar filing. These real world assets speak at our events and they talk about why they're tokenizing and why they chose Trusted Smart Chain. So we operate in a place of complete transparency. In addition to that, we also have built our own self-custody decentralized wallet. The self-custody is very important because a lot of people, especially newbies, they typically go to exchanges like crypto.com, Coinbase, they buy their crypto and they leave their money sitting on an exchange. And what they don't realize is when they log in and they look at the screen and they see their balance, what you're really looking at is an IOU. You don't have true custody of your tokens. And if that exchange were to go under, which has happened before multiple times, you would lose your money. So having a self-custody wallet where you hold the keys to that wallet allows you to safely and effectively manage the tokens that are being deposited into your wallet every day. And should you decide that you want to liquidate, you simply take those tokens and you transfer them over to the exchange, any platform that we're currently on, the T7X.io platform. You sell, liquidate to fiat currency, and then you can put that money back into your bank. We are, excuse me, sorry, wrong way. So we have one of the things that I would encourage you all to do as part of our trust but verify process is to go to explorer.trustedsmartchain.com. This is where you can look at the blockchain live in real time. You can look up the current price of the Trusted Smart Chain and what it's trading for today. You can look up how many tokens have been minted. Again, approximately 2.3 tokens have been minted so far this year. You can look at how many nodes are active and online. You can see the blocks that are being written in real time, transactions that are happening in real time. Everything is right here. Bitcoin, for example, has bscscan.com. You can look up any transaction that's ever happened on their network. You have Ethereum, etherscan.com. This is the validation that the blockchain is fully functional, that it's live. It's kind of like having a magnifying glass that allows you to go and look at the blockchain. Now, one of the things that we are most proud of is we actually just received our CertiK audit. So CertiK is the gold standard for blockchain security. Less than 2% of the cryptocurrency projects that are out there today hold an audit of this standard. And CertiK by far is the highest, most reputable company in the entire world. They come in and they evaluate your code. They look for vulnerabilities. They look for backdoors that maybe were created by developers. They look to see if what you're telling people publicly matches with what's underneath the hood. It's a 45-day audit, and when they come back and they grant you that approval, if you will, you are now among some of the industry giants and leaders in this world. People like Binance, Samsung, Crypto.com, Ethereum, Apple. They all hold a CertiK audit. So from a validation standpoint, it doesn't get much higher than that. Now, I want to talk a little bit about utility for a moment. One of the things, I'm going to share something with you, and it's my opinion that this is one of the most important things that I share with you today that you could apply to every cryptocurrency project that you evaluate moving forward. And that is, true value is not a derivative of excitement. It's a byproduct of use. True value is not a derivative of hype. You can change the word excitement to hype. It is a derivative of case use. So many people get caught up in the marketing and the hype side of things, but what you really want to look for is the infrastructure and ultimately what purpose does that coin serve? Is it adding value in some way to the world? Is it improving on technology? Is it giving you access to a valuable ecosystem? And so the remainder of today, I want to focus on two things. I want to talk a little bit about the utility of the Trusted Smart Chain token, and I want to talk a little bit about supply and demand. Because when you couple those three things together, that is a magic formula that took Bitcoin to $125,000 per token in the fall of last year. Now, yes, I do recognize that it's down right now, but that is cyclical, and we've seen that over and over and over again. And I do have some interesting thoughts about that if anybody wants to talk about that afterwards. But let's talk a little bit about the utility of the T7X platform, or the Trusted Smart Chain token. We had a grant. We actually formed a grant. And when I say we, ProsperLink as a company formed a grant, and we take 25% of all of our node sales, we put it into this grant. And any technology companies out there can come and apply for a grant. And in this case, T7X is one of our grant recipients. Now, remember, I mentioned earlier that our token is trading on the T7X.io trading platform. T7X is a exchange, licensed digital asset platform. They're fully licensed with the Security Exchange Commission. What they're doing that's different is they're catering to that new demographic that's coming into the industry that, again, doesn't want to go gamble with meme coins. What they want is they want access to a platform that they know that all of the tokens that are on that platform have been audited, registered with the Security Exchange Commission. Why? Because it gives accountability. It allows them to properly evaluate these opportunities, and it allows them to go buy tokens that actually gives them ownership in a high valued asset. Now, a lot of these companies, large majority of them that are tokenizing on the T7X platform, when they go file with the Security Exchange Commission, they file with what's called a Reg A filing. And this is significant because that allows them, when they open up their capital raise, to go solicit funds from both accredited and non-accredited investors. That's a big deal. That means that everybody has a seat at the table. In the world of companies that go public, they have what's called a private offering. A private offering, you're only allowed to participate if you're accredited investors. So this gives these real world assets access to a global market of investors. And typically during their capital raise, they'll usually get cleared by the SEC. They'll open up their capital raise and they have 12 months to go raise their capital. Now, during that period of time, anybody that goes and invests with them, they are paying on average a 10% distribution. They'll usually partner with a media company. The media company will go out and handle their marketing. Now, I want to be very clear. We don't get involved in any of that. They are registered securities. We do not solicit for. We are not raising money for them. We are not marketing their project to our community so that they will go and invest with them. They're more than welcome to do so. All we are is the infrastructure. We are the blockchain that makes it all possible. The reason why we approved T7X on a $50 million grant, and we've satisfied $7 million of it, is to support their efforts to go get real world assets listed on their exchange. They already have 12 that are onboarding as we speak, and they've got many, many more that are in discussions right now. So what's neat about this is not only has T7X chosen the Trusted Smart Chain as their exclusive blockchain, but they've also chosen the Trusted Smart Chain token to facilitate the entire ecosystem. So some of you are familiar with Ethereum. Ethereum is the second largest market cap, second most successful cryptocurrency project. Hit an all-time high of almost $5,000 a coin in the fall. And the reason why Ethereum was so successful is when they came out in 2016 and introduced smart contracts, all of these meme coins launched and they all used Ethereum as their infrastructure. There's thousands of coins that are listed on the Ethereum blockchain. Well, anytime you want to go buy any coin, buy, sell, trade, or swap any of these coins that are listed on the blockchain exchange or the Ethereum exchange, let me say that again. Anytime that you want to go buy any of these coins that live on the Ethereum blockchain, you have to go buy the Ethereum token first. Why? Because you have to pay the transaction fees with Ethereum. So essentially what that did is it gave Ethereum instant utility. That utility or demand essentially has led to a very successful project. Why? Because hype's not driving the buying. Hype is short-lived. Marketing is not driving the buying. The buying is coming from real world utility. And in that exact same way, we have created the exact same type of utility. I'll also mention that the third most successful or third largest market cap, at least it was in the end of last year, was BNB. BNB is the native token to Binance. So if you want to participate in any of the projects that are in the Binance ecosystem, you have to go buy BNB first. So the same type of utility that led to the second and the third most successful cryptocurrency projects in the world is exactly what we're doing here, except it's just the evolution. We are focusing on tokenizing real world assets, which is the future of cryptocurrency. So to give you a visual on this, T7X is an exchange. That's where people go to buy and sell crypto. Except here, people go to T7X because they want access to registered securities. Why? Because they're held accountable, because there's investor protection, and because they can participate in their capital raises. So T7X is in the process of listing tokens that are real world assets. And Tulum coin, luxury hotels in Tulum. Both, I believe Dean and Scott have been down to Tulum. They've met the billionaire that owns these hotels. James is his name, and James, talked about why he's tokenizing, why he chose Trusted Smart Chain, grow estate, medical grade hemp facilities across the United States and Canada. One facility in Canada alone is worth $50 million. They sell medical grade hemp to countries like Israel. White Claw Crude Oil and Gas Company. Those are a few of the projects that are in process right now. Now, they're being listed on T7X, but they're powered by the Trusted Smart Chain. Our blockchain is the infrastructure. So what is a blockchain again? It's nothing more than a network of nodes. Think of nodes again as the blockchain's version of cell towers. They work together to validate the transactions. They maintain the network and they create a secure and resilient system. So if you are a node operator, and currently we have active nodes that are available. We're only selling 200,000 nodes. We've already activated 38,000 of them. Once we sell 200,000 nodes, we're done. We will never sell any more than that. Our node operators, for their support of the network, by validating transactions and keeping the system secure for their role, their participation, they receive rewards in the blockchain's native token. Every single day, they will receive a distribution of the Trusted Smart Chain token. Now, what can they do with those tokens? Well, A, they can go to the open market and they can sell them every day if they want to for whatever the current market value is. Or B, they could choose to hold on to them. Why might they hold on to them? Well, I want you to think, and this is a generic question, doesn't matter what asset class that we're talking about. Any asset that you can think of, real estate, diamonds, Rolexes, classic cars even. Any time that that asset becomes more and more scarce and the demand goes up, what happens to value? Price goes up, right? You got people that are moving into your neighborhood and there's not that many homes on the market. Everybody wants those homes. What happens to the price? So why would somebody want to hold on to tokens when they operate nodes? Well, I want you to go back to 2009 when the Bitcoin network launched. There were pioneers and visionaries that said, I want to support this network. I'm going to mine Bitcoin. And they started earning Bitcoin when Bitcoin was worth less than a penny. Now, they could have sold at any time. Now, it's harder to do. They had to go find somebody to buy back then. There weren't exchanges. But over time, once it hit $1, $10, $100, $1,000, they could have sold. Or they could have held on to those tokens. Now, what was driving the value? Demand, utility. Because over time, the adoption started happening. We started to see more and more people buying it. We started to see more retailers that were accepting it. Eventually, we've arrived at a place where governments are now buying it to add it to their overall, their Federal Reserve, if you will, their store, I've been talking too much today, Scott, their overall reserve. And then you have the institutions that are buying it. I saw something just today that was really interesting. It showed that the users, the holders, the individual wallet holders, 692,000 shares essentially of Bitcoin have been sold by those users. And if you look at the institutions that are buying, now it's the institutions that are buying up all of those losses. So what's happening is there's a squeeze that's going on. You have these banks and the media that's created fear, created a massive sell-off, drove the price down. You've got these individual wallet holders that fear and panic creates emotional sell-off, and all the institutions are just buying up the tokens. So the question I would ask is, what do they know that the average person doesn't? So in the same way, you're earning Trusted Smart Chain token for your support. Now, you can sell whenever you want. That's the beautiful thing. You're in full control. What dictates the price of the token? The community, the markets. At the end of the day, you decide when you want to sell. The community sets the price based on what they're willing to accept. But where does the buying come from? That's the question. Where is the utility coming from? The utility comes from a number of different places. So we, for example, require the real world assets that are raising capital. Remember, they file their registration. When they get cleared, they open up their capital raise and they'll go advertise all over the world. People will come and invest. They're typically offering a 10% dividend during that period of time. Now, they will then have to pay quarterly distributions to those investors. We require them to pay those investors with the Trusted Smart Chain token. What does that mean? Well, let's say a real world asset is approximately $50 million, and they're paying out $5 million a year in distributions to their investors. That means the real world asset manager has to go to the open market and buy Trusted Smart Chain and then pay their quarterly distributions with the TSC token. Now follow me on this for a moment. If we have 100 real world assets and the average is 50 million each, they're paying out 5 million a year. That's $500 million a year in annual demand for the Trusted Smart Chain token. That's $1.4 million a day in buying of the Trusted Smart Chain token in that scenario. Here's the most important question. Who do the real world asset managers really buy the tokens from? The node operators, Dean, Scott, Blake. That's who they buy it from, and they get to decide when they want to sell. Now, that's not the only utility. We also require the real world assets to take 2.5% to 10% of their capital raise, and they actually have to go buy Trusted Smart Chain with it, and they have to stake it for 5 years. They're not allowed to touch it. Why? Because we want to make sure that they have some collateral there to meet their obligations to their investors. But what does that do to the actual circulating supply? It shrinks it. You guys realize Bitcoin, there's only 21 million Bitcoin. Approximately 20% of Bitcoin is locked up in wallets where people have forgot their passwords or their seed phrases, or it's sitting on hard drives that were thrown away in landfills that people have been trying to search for 10 years because they've got hundreds of millions of dollars on their hard drives. But what did that do to the overall availability of Bitcoin? It made it even more scarce. There's already a fixed set supply, and now it's becoming more and more scarce. Anytime that you have a growing demand and a diminishing supply, what's the end result? You end up with a very valuable token in Bitcoin's case. We've already talked about the gas fees on T7X, and that utility being the utility that has led to the second and third largest cryptocurrency projects in the world today. What we have created is a blockchain platform that provides a meaningful purpose in the marketplace. But it also, with every real world asset group that comes onto the blockchain, it just increases the overall utility for the trusted smart chain token. You guys realize when Bitcoin launched, it had zero utility. Absolutely zero. It was speculative. Speculative for the first 10 years. People bought it hoping to get lucky, hoping to time it right. It wasn't until the last 5 years that people started buying it because they looked at it as a store of value that was a hedge against the dollar. And now you've got retailers around the world that are starting to accept it. It's transitioned from speculative to utility. We have developed utility right out of the gate. The only difference is we're not fighting against the banking system or the governments anymore. Now, let's talk a little bit about supply and demand because it does matter. You guys are obviously very familiar with fiat currency and the fact that they just keep printing and printing and printing and what's happening to the value of the dollar. Last year alone, it was down 10% in 1 year, the worst performance of the US dollar since 1983, down 25% in the last 3 to 4 years. Think about that for a moment. So what Bitcoin did that was genius is they said there's only going to be 21 million total supply. That's it. And that programmed scarcity led to a unique store of value and an appreciating asset in Bitcoin's case. The second thing they did is they said we're going to have a halving event every 4 years. See, when you have the reason why crypto became so popular and why smart contracts were such a big deal is because it allowed for the tokenomics, the constitution, the white papers essentially to be programmed algorithmically into the code of a smart contract, which means it can never be altered and it can never be deviated. What that did is it removed the human element. So now, instead of it being a promise, it's just a function of the software. And when I say it, what I'm talking about is the distribution of the tokens that go out to the node operators. We're not promising you that you're going to get a distribution because that promise could be broken. It's programmed algorithmically into the smart contracts, which can never be altered and never be deviated. So what Bitcoin did is they built into their tokenomics that every 4 years, they're going to cut in half the amount of token that gets released to the node operators and eventually goes into circulation. So again, what that did is you've got a growing demand, but you've got a diminishing supply over time. It's becoming more and more scarce. Well, we know what that scarcity and that demand did for Bitcoin. So we looked at the tokenomics of a lot of different projects. They're not all the same. For example, XRP has billions of tokens that are out there. There's a lot. Every project has their own total supply distribution model. We looked at a lot of them and ultimately came back to Bitcoin and said, why would we try to outmaster the master? So our tokenomics are exactly the same as Bitcoin's. We have a total supply of 21 million. We have a halving event every 4 years. And here's what a lot of people don't realize about Bitcoin, and us too. In the first 4 years, you guys realize that 50% of all of the Bitcoin that will ever be minted went out in the first 4 years before people even understood it, really. Think about that. 10.5 million Bitcoin went out between 2009 and 2013. To who? The node operators. Now, then they had a halving. See, and they've had 4 halvings since then. And after every halving, by the way, Bitcoin has hit a new all-time high, historically speaking. So here's the thing. You could go buy a Bitcoin miner today. You might say, well, Bitcoin's proven. Why wouldn't I go buy a Bitcoin miner and just operate a node on their network? You can't go back to 2009 to 2013 when distribution was at its highest, when they were distributing 2.6 million token per year, which breaks down to 7,191 token a day. And they have millions of people on their network that you're competing against. So you're fighting for 450 Bitcoin that are being minted a day. Where we are right now in our distribution is exactly where Bitcoin was in 2009. We are distributing 7,191 tokens a day. We're about to have our first year anniversary. We still have 3 years left of what I would describe as an accumulation phase. See, those people that were supporting Bitcoin in that era, they had access to something that was priceless. And it wasn't just the price of Bitcoin, it was the accumulation of Bitcoin. Node operators that are seasoned understand a simple principle. Today's price is not indicative of tomorrow's value. The people that are operating nodes on Bitcoin's chain today, one node might produce about $4 to $5 a day in Bitcoin. Do you think they're getting excited about their $1,200 a year that they're mining? Of course not. If you go spend a decent miner is going to cost you 9 or 10 grand. You guys can do the math and figure out where your break even is. They're not mining for today's price. They're mining because they understand supply and demand. They believe that that $5 today will be worth 10 times that or more in 3 to 5 years. I don't go into any node project with less than a 3 to 5 year mindset. Why? Because true utility takes time. Hype is exciting. Hype is marketing. Hype is, oh, it's going to the moon. You got to get in fast. True infrastructure is boring. It's just letting the utility bake. It's putting it in the oven and letting it bake. Now, let's talk a little bit about becoming a node operator. So when you operate a node, you earn distributions every day for the next 120 years, as long as your node is active. Why are you earning those distributions? For your support and participation. So let's talk about the support. Your node is validating transactions for the blockchain. It's maintaining network security. It's adding blocks to the blockchain. It's supporting those smart contracts for all of those different token projects. It's storing and ensuring the integrity of the blockchain data. That's what your node is doing. Your responsibility is twofold. Number one, your responsibility is to make sure that your node always has power. Good news is the blockchains that are built today use nodes, not hardware miners that consume a tremendous amount of power and electricity. Now you can actually host your node in a data center, just like if you wanted to host a website. They're much more energy efficient. And we have third-party data center companies that provide a discount to our members. And for as little as $1.95 a month, $24 a year, they'll host your node. And you never have to worry about it coming offline. Now, if you have a server, you can host it there too. So that's the first thing. The second thing is your participation. Every single node operator gets a vote. That vote allows you to be able to help direct and guide the direction of the trusted smart chain. Remember, it's run by its members for its members. In addition to that, you get access to one of the most esteemed blockchain communities in the world. You get access to our social communities. You get access to our RWA on-site visits when we do them. You'll get access to our members-only events. We've already had 2 this year. One was in Puerto Rico a few weeks ago. Just before that, Scottsdale. We've got another one coming up in March 29th in Las Vegas at the Red Rock Hotel. You're all invited. And also, you get access to our affiliate program. So our node operators, there's different levels of participation, and they get to decide what's right for them. We have some node operators that they pay their monthly fee. They show up to the monthly update call. They keep tabs on what's happening within the community. They vote whenever there's a vote that comes up on the blockchain. We have some node operators that are a little bit more active. They actually participate in the affiliate program. We're not direct sales. We're not network marketing. We don't want to be network marketing. But we do have a referral program, and our affiliates help share the message of being a node operator with others. What does that do? It strengthens decentralization. It allows us to be able to reinforces trust. It allows us to be able to continue to bring on more and more real world assets. So they are compensated for doing so. And we also have other community members that bring real world assets to the table. Scott has brought a number of real world assets that he has introduced that are looking to raise capital. And Scott is among thousands of members within our community. And so what's great is as the community grows, the ecosystem grows, the entire project continues to be more and more strengthened. This is not a passive opportunity per se. It doesn't mean you got to go to work every day and sit there for 8 hours a day. That's not what I'm saying. But what I am saying is that most people go to an exchange just to buy tokens. Node operators are participating in the infrastructure. They're the builders, right? They're building the infrastructure for the next era of cryptocurrency. So there's a different level of mindset and participation here. Our node operators act more like stakeholders than they do just, hey, I wanted to go invest in Bitcoin and hope that I caught it at the right time. Nodes are currently priced at $3,900. I say currently because every 1,000 nodes that sell, the price goes up $100. So we sell through 1,000 block of nodes, the price will go to 4,000. Sell through another 1,000 block, it'll go to 4,100. Now, when you buy a node, You'll get an email. It'll tell you how to download your wallet and to go ahead and get your node hosted. Once it's activated, you start receiving a daily distribution. Remember, 7,191 tokens a day go out, and the only variable is how many nodes are online. Everybody gets a distribution. So you'll get that deposited into your wallet, and you also now get a vote in the DAO and access to all of our social communities and our events. Now, some people operate more than one node. In fact, I'd say a large percentage of the people in our community operate more than one node. So we have different statuses within our community. Prestige is the next status, 5 nodes. That means you get 5 times the distribution. So hypothetically speaking, if one node was distributing 0.20 token per day, just for simple math sake, and I had one node, then that means every 5 days I'd get one full token. Or if I operated 5 nodes, every day I'd get one full token, right? If I operated 10 nodes, I'd get 2 tokens and so forth. So 5 nodes gives you 5 times the distribution. You also get 5 votes in the DAO. Next level is legacy level at 20 nodes, which would give you 20 times the distribution. It's a very common level within our community, 20 times the votes as well. So you also get access again to all of our events and all of our social communities. Luminary is 50 nodes. So anybody that operates 50 nodes or more is a luminary level. They get 50 times the overall distribution. Then we have our architects at 100 nodes, which is 100 times the distribution. We have our titans. We've got titans that are on here today, and titans operate a minimum of 200 nodes. 200 nodes, what that does is it gives you access to a very exclusive community. The titans get invited to special dinners, special breakfasts, special networking events. And so the titans, they get additional access. We have another level called Sentinel at 500 nodes. And then our last level is Icon at 1,000 nodes. And believe it or not, we have hundreds of Luminary, Titan, Sentinel icons that are here within our community. Obviously, they're earning more and more rewards. Now, I do want to point out at the Sentinel and the icon levels, we cap the amount of votes at 200 because we want to maintain decentralization. We don't want to have any one person have too much control or authority over the overall blockchain. 1,000 nodes is the most that we will sell any one person. So in closing, I'll say this. As I mentioned earlier, this is not buying some token in the open market. This is infrastructure. I look at technology, and I've studied technology quite a bit. I'm an investor, and I like to invest in different things. And I believe smart money invests in the roads before the rush. So for example, any disruptive technology you've ever heard of, there's 2 categories, the builders and the users. Jeff Bezos was a builder. He built a platform, hundreds of millions of users today. Mark Zuckerberg, he's a builder. You've got billions of people on his platform today. Our node operators are the builders. They're building the infrastructure. They're paving the road before the rush. What's the rush? The 16 trillion in real world assets that's getting ready to tokenize. And what's beautiful is that for their support and participation, they earn the blockchain's native token every single day, which is the token that the real world assets have to buy. It's also the same token that the investors have to buy, which creates real use and real utility. So with that, I appreciate the opportunity to be here to share the vision with you guys today. I'm happy to stick around and answer any questions that anybody has. I've got about 10, 15 minutes or so, and I'm going to kick it back over to you, Dean, and we'll go from there.
Travis, great job, and I appreciate it so much. You guys, so this is a great time that you can ask questions. You know, Travis said he's got 5 or 10 minutes or so here. So let's start out with that. Does anyone have any questions for Travis? Remember, you have to unmute your voice.
Silence the crowd. Scott,
you did a good job. Good job. Hey, Travis, do take a couple minutes, talk about Vegas, if you would, real quick.
Yeah, so Vegas is our 1-year anniversary celebration and dinner gala, and it's going to be a really big deal. So first of all, we have a daytime event, and then we have a daytime experience and our evening experience. And the daytime experience is where you can come and really figure out what you're a part of. If you're a node operator, we encourage you to come really see what you're a part of. That's where you hear from the founders. You don't just hear the words, you hear the heart of the founders. You hear from the development team. You hear what's the latest that's happening on the blockchain. You hear updates on the real world assets. You hear from our attorneys. We have our one of the best attorneys in the country that keeps us safe and makes sure that we're following all securities laws and all the things that we need to do to avoid any challenges in this space. And so that's really where you really develop that belief. In the evening, we have a dinner gala, and it's going to be a lot of fun. We've got entertainment, we've got keynote speeches from some pretty high level motivational speakers that are going to be in there with us. We're getting ready to announce who they are. We've got a casino party. We're going to have a champagne toast to celebrate the 1 year anniversary at midnight that night. So it's going to be a lot of fun. But anybody that wants to learn more about what we're doing, what I would recommend that you do is you go to tscvegasgala.com. tscvegasgala.com. And here on this site, you'll be able to come and read all about it. You get all the details of the daytime experience, the nighttime experience. You can buy your tickets. We are still on early bird registration for 3 more days. Our affiliates and node operators do have to buy tickets. Guests are free for the daytime experience. Everybody has to have a ticket for the night because we do have a plated dinner. But it's going to be an amazing experience, and I can tell you that you'll learn a ton by coming to this event. So if you haven't registered yet and you're a node operator, definitely get registered. And if you want to come and learn all about what we just talked about today at a whole different level, come to Vegas.